Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is February 12th, 2019, and tonight's subject is going to be copper, the ETF being CPER. Now, I talked about this one not too long ago, basically on February 4th, if memory serves, that I was talking about the fact that the market was going to hit some type of resistance. Well, that is what took place, and so since then we have the different trends are a little bit mixed here, at least on the long-term trend. That one's kind of in neutral phase right now. It's always a good sign when there's opportunity when the technical rating is flat. And this kind of leads me into what's tonight's basic conversation is going to be the fact that copper is gotten a little ahead of itself. It found that resistance and needs to rest. And so from that resting, we'll see where and how things kind of play out here. So we had a wave high that triggered the other day. It's still in play right now. So that's one thing that's telling us that that resistance that we had talked about before is really fairly strong here. We also, if we look at the deep dive alerts here, we have two. We've got a pop and we have a pulse. Both of these are reversal signals. They're not long-term reversals and maybe not necessarily due for systems, but it's a cautionary note that the market had gotten ahead of itself and was likely to rebound a little bit, or at least reverse a little bit. Now, the other thing that's taken place is copper is, of all the markets we track, the one that's been the most explosive. It's been in an expansive phase. Even though it's retracing a little bit, it's still, of all the markets, one of the top, or the top market as far as a rating for a market that has been in an expansive phase. If we actually take a look at the market, daily bars here for copper, this was the surge that took place. It was relatively strong for copper considering it was in a little consolidation. So we went from the low end of the consolidation to the upper end of the consolidation. And now with that resistance at the 200-day moving average and that resistance level, it's not unreasonable to expect the market to sell off a little bit. And so with the fact that we ran into this, the trend level was telling us that the market had gotten perhaps a little bit ahead of itself and it needs to rest. That's the major point here. And then after that rest period, maybe down at the 50-day moving average, which happens to correspond with this support level back over here, what we have is a tight consolidation that's coming up when it comes to the support and resistance levels. So I would expect this rest period that I'm referring to is going to just simply meander in between the upper and lower levels. It may only take a couple of 2 or 3 days or so. That could be enough, but then there should be a good move, and so it's kind of preparing you for maybe later on this month for a really good opportunity. So the resistance is right through here. Also corresponds with the 200-day moving average. I mentioned this so that you can pop it up on your charts as well. The 50-day moving average corresponds essentially with this level back through here. So the fact is the market is going to ping pong, hopefully stay between these two levels, whether you look at my support and resistance levels or you just simply look at the 200-day and the 50-day, that a rest between that without a break below would be a good sign, and then that would allow, and this is the energy level right here, would allow the energy level to come back down into a more appropriate level and kind of get ready for the next big move that is likely to occur. But first we got to go into this little consolidation. And the reason I mention all this is that we do not want to see a break below this level right through here. If that happens on a closing bar basis, then we've got another situation. So the systems themselves are basically flat the market. We've got 4 systems. We got 2 short and 2 long, and we're just simply in hedged mode right now. Obviously, we've got conditions that we're looking for, and if we break below or break above those levels I was referring to, then some of these longs or some of these shorts are going to unwind, and then we'll have a legitimate position out there. So we're definitely in a mode right now that there's a very good opportunity to be had, but the reality is that the systems are kind of in a neutral mode, just trying to figure out which way the market actually might play out here. Now, on a longer term basis, here is our depth gauge. And depth gauge is just a longer term indicator, and right now it's in a neutral phase right now. You can see that, and that's what the blue line represents. You can see that we've had conditions where we've come down and we base a little bit, and then there's a surge, and then we came back down, there's a base and another base here. Eventually, we're going to, with this basing that we have here, it's going to start to rise, and that's going to be the opportunity that we're going to be looking for. Now, this being a longer term, that's why I'm saying we still have a couple of weeks with copper perhaps, but the longer we can stay, and I'll just come back to the chart here, the longer we can stay between these phases here, this upper resistance and this lower support, the longer we can stay between there without a breakage below or a breakage above, then that's going to wind us up like a spring, and we should see some type of an explosive move. So for the time being, as long as we stay in this phase, then our systems, the longs and the shorts, should stay intact. Eventually, one side or the other side is going to break, and hopefully we'll add more to the long if it should break to the upside, or add more to the shorts if it should break below. But for right now, if we can just get that little consolidation, then we would expect a bigger move, and that's where our opportunity is, and that's why I showed the depth gauge, because the longer term, I believe that it really wants to go higher. But we're still in this longer term consolidation, and we're in a tighter consolidation right now, that we probably have a little period of time, a pocket, where the markets probably do, as has been said, that it just needs to rest a little bit given that thrust that we actually had. And if we can stay above that 50-day moving average, rest a little bit, then I would expect that there'd be a good pop to the upside. So that's the kind of the outlook for copper, and we'll definitely want to watch this market. So of all the markets, at least keep track of what is taking place with copper. So with that, we will take a look at another market tomorrow. Thanks very much. Bye-bye.